All right, good morning, good-looking people. It is November 21st. That's a Wednesday, the day before Thanksgiving in the United States of America. So I recommend today that we get together as a community at Forex.Today's YouTube channel to review the dollar pairs, to review the yen pairs, gold and oil, and then call it a day. Remember, trading is going to be thin. Markets are closed tomorrow. They're half day on Friday, just out of a legal requirement. But all intents and purposes, just the interns are going to be around, and all the big boys are going to be out flying around the Caribbean, floating around the Caribbean, all that kind of stuff. So trade safe today, huh? So again, thank you for being at the Forex.Today YouTube channel. Please subscribe so that when I click stream, you are notified and it says, hey, would you like to attend today's webinar? And you're like, yes, I do have the time today. Boom. And it brings you right into the webinar. I'd appreciate it a like. The more likes I have, the more I know I'm covering the topics that you want covered. For example, if you say, hey, can you cover euro dollar? And I cover euro dollar, you should probably give a like. And then lastly, if you like my charts templates, the download link is available. You get the charts, the profiles, the indicators, the pivot points. You get everything, and it's all there for free for your pleasure. So without further ado, let's go. So g'day, mate. How are ya? How's your mum? My name is Wayne McDonald. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. Been trading currencies for approximately 15 years, doing webinars. Well, doing Forex webinars for about 15 years. So I've been around. I've learned a few things, and I'm here to share them. I want to make you a success sooner than later, at least show you the path, clear the way, answer your questions, give you all the tools and resources you need to succeed. Yeah, I want you to succeed. So the way you pay it back, if you benefit from these webinars through gaining skills, gaining knowledge, gaining confidence, just having fun, great. Then pay it back. Visit tradersway.com, open up an account, give us an opportunity to earn your loyalty and your respect and, of course, your business. You can test our execution speeds, customer service, spreads just by downloading the MT4 or CTrader demo accounts. Would you please do that today? Tradersway.com. It's your way at Traders Way with Traders Way. By the way, why do I say it's your way? You can have a variable spread account, a fixed spread account, an ECN account, or a combination of everything. Super cool. Yeah, so this is a holiday. Most people are not trading. I'm on my way to Florida in a moment or two, but I can't let you down. You're my sweet baby. You know, I'm thankful to be a currency trader. I'm thankful for working with Traders Way and Forex.Today. I'm thankful for having the support of my wife and my children and the love and support of my mother and my father. These are pretty basic things, but I'm pretty lucky to have them. I'm very thankful and grateful for having the opportunity to get my graduate degree at Harvard. That's something really cool. And, you know, to be with the Forex.Today and YouTube audience every day, the webinar audience, the non-farm payrolls audience and stuff. But most importantly, I'm grateful and thankful for having you in my life. So thank you very much for that. Without further ado, let's just get going. Start with the yen pairs. Want to make sure I'm on the right time frame on everything. Make sure I have congruency and periodicity. You know what? In fact, I'm going to put them on 4 hours. I like doing analysis on 4 hours. Okay, 4, 4, and 1. Okay, cool. Now, the first thing I want to see is, yeah, Rob, you're one of my favorite invisible friends or imaginary friends. I still think one day I'm going to wake up because a new medicine is going to be discovered. But all of a sudden I'll wake up in a hospital and they're like, you've been asleep for 25 years since the dot-com bomb. I'm like, what? But I've been a Forex trader. They're like, no, you've been in coma. You've been in a coma. I'm like, but I talk to people every day. Yeah. Yeah. Or I'm just that guy. I'm just that crazy guy. Anyways, I want to look for congruency here. I'm looking first and foremost, as you probably know, for green candles because I want evidence that the Japanese yen is weakening, right? If these are going up, if they're all going up, it means Japanese yen weakness across the board. And as we've discussed over and over and over again, right? Up, or let's say weak Japanese yen, especially across the board, is indicative of favorable macroeconomic conditions, meaning business is good globally. Okay, and that's a risk-on scenario. If you want to Google something, Google the Japanese housewife. And if a whole bunch of naked pictures show up, you're on the wrong website. Japanese housewives that it's how do you say it? It's a sort of a cliche thing. Well, cliche is not the right thing, but anyways, there's this mythical Japanese housewife that has the husband working all day, making all the money, and she's at home, and she's the one investing the money. And if you're a Japanese investor and you've had 0% interest rates for the last 25 years, you tend not to invest at home. You invest abroad where you can get a higher yield. So Japanese housewives are carry traders. Okay. So when things are good, they invest their money abroad and that weakens the yen. When things are bad, they bring their money back home. Mr. Highfield says, but stock markets are way down, so why would the yen be weak? Great point, because when stock markets are down, the Japanese yen tends to be strong. Maybe we're closer to a bottom to that move, or the decline in the stock market is affecting domestic investors more than it is international investors. So maybe like your wealth manager's freaking out and selling your stock portfolio like crazy, and the Japanese investors are like, still better than what I have here. Because remember, like in Japan, the Bank of Japan owns something like 70% of the Nikkei. How do you unwind that? You can't unwind that. Well, Mr. Highvolt, you are absolutely totally correct. If these are going up and the stock market's going down, somebody's wrong. So if you were looking to buy the stock market, Mr. Highvolt, I would take that to heart and look for support, drop into smaller time frames, look for support, reversal patterns, jam a trade in, drop a stop, and pray, right? And you can say, well, you're looking at macroeconomic conditions first, seems favorable for a reversal in the stock market. This drawdown is a buying opportunity. You pick your lines and you go. You start tiptoeing into the, you don't dive into the deep end. You start tiptoe in, right? And then if you see the stock market open today and it just tanks, then you sell all these yen pairs. Sell. Euro yen, sell, right? What about USD yen? Nah, stay away from that. I keep telling you, stay away from that one. Okay? Thank you, Mr. Highvolt. I appreciate you. All right, So that's the first thing I'm looking at, right? You remember how we had this set up yesterday? This was, I pointed out that this is definitely a sell zone where bears are going to live. And they already did it on sort of the Sunday open. And they were likely to continue, right? And I thought I identified a lower level. It must have been on a different chart. A lower level for rebuying if you're a bull. Basically, if I were me, I would look at this area, right? A 382, a monthly, a weekly. That's where I'd go long if I were me. Okay, and it looks like somebody's doing this. So if you haven't done that, then you're late. So now you can't do, or you shouldn't do it. The best thing you could possibly hope for is a drop down to the 5 EMA, especially on a smaller time frame. Try to pick sort of a micro dip and try to ride the 4-hour 5 up through all the resistance. But once again, if that's what you're doing, it's okay. Like, this is absolutely okay. But what you're doing is you're making a career of being late, and you're being aggressive at very mediocre times. So, like, you're crawling on your belly halfway across no man's land, and then what do? You stand up and charge. You're like, whoa, 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 whoa. Great idea, but your strategy is your timing is horrible. You don't stand up halfway across, right? So anyways, you're supposed to be aggressive here, not in the middle, not in the no man's land kind of thing. Like, I don't know. Figure it out. Figure out what my analogy means. But anyways, if you're going to try to catch it, you're in that zone now is all I'm trying to say. And all you're trying to do is ride this 5. Okay? Now, very often after a fresh 5-8 cross, it drops to the 8, and then you bounce off the 8. Okay? Like basically a little bit lower is what I'm trying to say. Okay? Do you guys know how to use the moving averages? Remember, I think I have 4 videos at the FX Bootcamp website or YouTube channel. And I must have recorded it, I don't know, 10 years ago for FXCM and Daily FX. And one of them is like how to time your trades using moving averages. So you should know this. And one of the things you should look at is say, well, for the last 3 weeks, we haven't had a trend. We're sideways. So buying at the bottom is fine, but also you would kill your 21 and 55 because there is no market. If the market's sideways, there is no bull. It's not a bullish market. It's not a bearish market. There is no market. There's only bottom and top. So in that case, you would delete these things, right? Like this. I just ignore them. But let's do it this way. Delete, right? If there's no market, then you don't need to measure it. So all there is 5-8 cross and resistance, which, we right now currently we have this, right? So now you have the 5-8 cross in the 4-hour, right? You could either catch a dip here or like I just did, drop into like a 15-minute chart and try to catch something, okay? Try to catch something. But even then you might have already missed it. That's why I recommend buying at support, not after a bounce at support. Whoa. And I'm quite sure we covered this yesterday as being the next buy zone. Is that true? I don't know. See, I don't know where you guys get all this stuff, but it just sounds like something that somebody read in someone else's book, and then when they wrote their book, they put that in there. Does it range 70% of the time? On what time frame? Like, it doesn't mean anything to me. Right? Because what does that mean? Does it range on a 1-minute chart? 70% of the time? I don't know. I don't know about that. Daily chart, weekly chart, maybe. So I don't know. I don't make a big thing about those things. Right, so I guess, shut the door. To me, there's only 2 truths in Forex. There's price action and there's pivot points. Everything else is fairly irrelevant. I guess on top of that, there would be fundamentals and seasonality. Okay? Fundamentals and seasonality, price action, pivot points, everything else is just blah, 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 blah. You can add more. You don't need these moving averages. Get rid of them if you want. But they're helpful. You don't need them. They're training wheels, right? Cool. All right, so one of the things we talked about on pound yen was being a bull or a bear. These are daily pivot points now, remember? Remember how I highlighted, like, if you were a bear, right? Well, if you were a bull, this was a buy. If this was a bear, you were a sell. So if you bought or sold, you kind of broke even or whatever. But then bear's one here, so there's a sell zone. There's a sell zone, right? This one you didn't get. There's a sell zone. There's a sell zone. But even the other thing I pointed out is bulls even had opportunities to even make small profits, but certainly break even on a lot of these. So if you're a buyer here, you missed out, you didn't get anything, and then all of a sudden here you got something, then you did get something, right? So for 3 days you didn't lose money, and then for 2 days you did make money, and then all you had to do, like here, is be a bear, and that one, boom. And you never had a bullish opportunity. So once again, so you made money 2 out of 6 days, but you never had opportunities the other days, right? And then so on and so forth, right? Bearish, no one got anything. Maybe a bull tried to buy. Here, maybe a bear tried to sell. Here, a bear tried to sell. And then this morning, when people walked into the market, let's go down into here, right? This is the bullish buy if you're day trading. This whole area, really, but you should know that that particular pivot is hardcore buy if you happen to be a bull. Now, the thing is, these are really short term, right? They're just daily pivots and all that kind of stuff. But when you're setting up your trade plans for the day, it can be important. And like, look at yesterday. Oh, it was just bearish here, fine. And no real buy opportunities as a bull. Actually, this was the buy area for bulls. Yeah, you might have tried a few times, but I don't think you lost a lot, and you probably didn't make anything. But the bears won just simply because the market was bearish that day, not because anyone was a genius. And then, then the new day starts, so you're right at your buy pivot, so you could, buy it and put your stop here, below the lowest low. What I typically teach is you put your stop below the S, okay? But whatever, so you're like, oh, well, I'm a bull, and I'm just at the bullish buy zone, and bears are where? Bears are selling here. So what did it do, right? Asia took it up to London Open. We knew there were bears living there, right? Takes it down. And then what? Bulls take over. Do you know that's going to happen? No, but there are only 2 places where a bull would buy. This place and that place. So today it just happened. Again, no genius, no crystal ball. If you only bought where you were supposed to buy, it worked out today. And if you sold where bears were supposed to sell, well, you probably didn't lose money. And you made money yesterday and the day before doing just following basic rules of engagement. So you're like, well, sort of like going back to the conversation we had, maybe it was yesterday, where we talked about how do you deal with frustrating periods where you're having a drawdown or you're not getting the profits that you wanted or there's no follow through on your trades. Well, you have to remind yourself, it's not you ever. When you make a lot of money, it's not you. You're just doing your job. You bought it at support. There's no genius there. You didn't outsmart anybody. You just kind of did your job, right? But when things go bad, you have to just say, look, market conditions have probably changed or are not favorable anymore. And it's not me. It's just the market conditions changed, and I probably should recognize that and back off. Really? You lost the feed? Really? Let's see. Really? You lost the feed? Shut the Dough says support and resistance is the same, or pivots are the same as buying at support and resistance. Pivots are a form of support and resistance. Okay, I trade 2 types of support and resistance. Okay, one is based on price. The second one is based on market. Okay, right on. Loud and clear. Thank you, Ross. Lima Charlie. Echo, echo, echo. Okay. So anyways, so that's that, right? Just kind of take yourself out of the equation, you know, and just look at it like a job, a daily job, a weekly job, a monthly job. So, Stephen, my bias doesn't change. So if fundies don't seem to line up, spend the day trying to figure out why, but stop trading. Like, for example, right, Stephen, if I gave you $1 billion and you were unsure what was going on in the market, you should probably not trade the $1 billion. Especially if I said to you, all right, Stephen, I'm willing to pay you 20% of the profits. You're going to make tens of millions of dollars if you can do this right. But if you lose money, I'm going to have you killed. And you're going to be buried in the sand dunes somewhere between Dubai and Abu Dhabi. No one's ever going to see you again. Or if you're in America, you're going to be buried in the cornfields of Indiana or Iowa or something. Okay? And you're like, oh, okay, I can make tens of millions of dollars profit, or I get killed. Okay? So that's really good, right? But you're not going to take a shot unless you're absolutely certain you're going to make money. Well, that's how you need to trade, right? So you're like, wow, my bias doesn't seem to line up with market conditions. Well, don't trade, because you're probably going to lose money. And that's what you should be afraid of. You're like, whoa, 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 whoa. Pick the low-hanging fruit. Don't outsmart the market. Go with the market. When the market's bullish and you're a bull, buy at support. Make money. So you're like, well, I don't do anything 70% of the time because maybe the market's consolidating or trending sideways. But 30% of the time I make money. Well, then make that your job. You see what I mean? What do you do 70% of the time? Nothing. Wait for the market conditions to agree with my fundamental bias. What do you do the other 30% of the time? Make money? Buy at support because I'm a bull? Right? Simplify, guys. Don't try to be the smartest kid in the room. Well, Jimbo, Forex trading is one of those horrible, right? And you drive. Yeah, I know what you mean, Jimbo. And you're totally right, Jimbo. You're totally right. Right? So you need to pick your winners. Oh, look at this one. Just gorgeous, right? Gorgeous. So what's going to happen here, guys? First of all, amateurs are definitely going to jump in late, right? And it's going to be tragic when this turns red. It's going to be just tragic. Right? They didn't want to buy at support. They didn't want to buy this dip, right? So this, you could have, on a small time frame, I'm sure you would have had this like role reversal type stuff, right? And then right? And so on and so forth. And now some guy's buying it now. You're like, that's so sad. If I had emotions, I'd feel so sad. But someone's got to pay for your kids to go to college, right? Might as well be this guy. So anyways, let's take a look at the yen pairs. Here, or not the other pairs. So over the holiday period, guys, you should consider going through an FX bootcamp course on price action, for example, basic technical analysis if you're new. Maybe the swing trading course, because then, yeah, so by the way, in January, we're starting the new swing trading course, and we're upgrading it. So not only are you getting weekly and monthly sessions with me setting up swing trades before they've started, but you're also going to go through performance coaching, one-on-one performance coaching, looking at the actual trades you've taken and the actual setups and reviewing the numbers and the statistics of all of that and how that adds up into your 3-year performance, because that's what you're trying to do, and make sure you're growing in the right direction, trading, with your strengths, and at the same time addressing your weaknesses and all that. Like a true, you might be the world's greatest Forex trader, like Tiger Woods used to be the world's greatest golfer. But Tiger Woods has always had a coach. So this is like working with me on a specific strategy, right? Weekly and monthly pivot point trading, and having a performance coach sit down with you and review your progress as a trader. Like, ciao. Remember, you're not allowed to even apply to get into that group unless you've completed the swing trading course. Okay? Not even allowed to look at it. Turn your head, avert your eyes. You're like, I'm not good enough. I'm not worthy. Yeah, well, finish the swing trading course if you want to be in on the January crew. So we kind of look at it this way, like, I'm going to show you how to trade properly. Great. Someone else is going to kick down your door and make sure you're doing it right. You personally. Going to blow you away, my friend. Blow you away. You're no longer allowed to produce mediocrity. It's unacceptable, and we won't allow it. So anyways, if you're interested in that, spend the holiday weekend, instead of losing money in a thin market, go through 20 hours worth of videos. Stop watching football games. So anyways, let's go through the recent past here. Down, 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 up, up. Oh, look. Down, 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 up, up. Oh, look. Here's Monday's trades, guys. Right? Last week's. Remember? Do you guys remember talking about this? I even asked, I said, well, based on the rules of engagement, even though it doesn't have to do anything, but based on the rules of engagement that I teach, what's supposed to happen here? And someone said counter trend trade, and someone else said counter trend trade, and someone else said CT, and I'm like, to where? PP, right? Central pivot point. Well, look, Monday, I'm up here, and then what happens? Continue mission. All beautiful stuff. Okay, all beautiful stuff. Beauty. So what's happened in the last 24 hours? Well, I can't add anything, right? But on Friday, that was an idea. On Monday, that was an idea. On Tuesday, it was an idea. Now look, it's not big money, but look, what we're doing is selling at resistance in a downtrend. We don't know if it's actually going to fall further, or if you're in America, farther. But you're selling lower highs at a confluence of resistance. You see what I mean? Like, it might work. Could work. Could be a rabbit. Could be. So how do I predict the future? Well, Thursday or Friday, we should be down in here, but we have the holidays. And then maybe Monday rallies up sort of into this area. And then next week we try again, if market conditions stay the same. If they change, we'll notice that by how it plays next week's pivots next week. Does that make sense? Hey, if you're new, would you do me a favor and subscribe? I'd like to have the opportunity to continue to work with you over time. Some people in this webinar have been hanging with me for years and years and years, in some cases a decade. Right, Henley? So if you're new, would you please subscribe? It'd be nice if you joined our team. Yeah, or Ian says, or there's this currency pair has geopolitical risk to it. right? So Brexit, somebody can babble something and boom, this could drop or it could skyrocket. That's another level of risk you have to assume. It can work for you, it can work against you, you don't know. So if you want to accept that, manage the risk as you see fit as an expert. If you find it unacceptable, don't trade this pair, trade something else. But yeah, you can't trade pound without being worried about, right? Yeah, Adam, 12 years, yeah. Yeah. Yeah, Ryan is the FX Bootcamp performance coach. Okay. Boop, 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 boop. So what do we want to do here? So this is, what, a week and a half's worth of work now. We had this as a bottom. Then this is a higher low. And then this was a higher low. And then this was supposed to create a higher low. We got a higher low, just not sort of the higher low that I see. I was trying to play this off multiple time frame EMAs and stuff. It looks like I made it overly complicated. Okay. It doesn't look like the rate of change to the upside is slowing down a lot. So don't be shocked if we pull back into consolidation. And that's what this pair has been doing for a while. And it's doing it off the monthly M3, which you would therefore expect. Yeah, UK Kenny says, oh no, Rob says since the happy song. I can't play the happy song because every time I play it now on YouTube, someone flags me for use of copyrighted material or something. And I'm like, what? So I don't do it anymore. Too bad. So sad. Someone ruined the fun. Euro dollar, going back here, we had this as a double top, then a lower low. So now I got to drop into more like a 15-minute chart. I think we even did this on a 5-minute chart. But let's go back if I can. Oh, just barely. Let me kill this part. All right. So we had this as a double top, if you remember. And then yesterday we had just made this lower low, remember? And I said, look, if you had spent, you know, the whole day and the whole week and the whole month being bearish, you would have noticed this slowly climbing over the course of days into a level which should probably, might perhaps act as resistance, and in an important level that should probably act maybe as resistance. And if it does act as resistance, you would look for a reversal pattern and then start trading if you were already a bear on this euro dollar. Does anybody remember all of this? And then we showed that there is a double top and that you would have been very interested. And this is a monthly pivot. And I think there was a weekly pivot and there was a bunch of other things. And there's a fib in here somewhere, but whatever. But we drilled it down like if you were a hardcore bear on euro dollar, you would have been ready, willing and able. You would have had an ambush set there hours and days in advance, right? So then we were down here. So it's not like we're up here and I set it up and then it fell. But we were here and we set up everything else, right? And what we set up, was it yesterday? It might have been Monday. I don't know. We were right here though. And I set this up. I said, look left. And I said, you can do a fib. You can do all this stuff. It doesn't really matter. But I set this up when we were still down and then projected down to say, If you were a bear and you're ready, willing, and able, you don't even have to be so brilliant that you double top it and catch this. You simply wait to get the lower low, look left, drag it across, and this is your new sell zone. You would sell here, and it would head down from there. It was Monday, right? Right? Cool, right? So when you're down here and you like pivots, we'll use the same tactics. If you like pivot points, or I mean fibs, you see the fibs now? So it made a new lower low. You're going to look here. You can see 786 is going to be important. You have this monthly central pivot, which is a key pivot. It's also a 618 Fibonacci retracement, as you can see. Okay. Very sellable, don't you think? Hey, Jimbo, if you don't like it, don't sign up. Free world, man. If a whole bunch of people say it's really helpful to them, nobody needs you to poo-poo on it. We all learn differently, my friend. And by the way, when the #1 golfer in the world has a golf coach, the golf coach is not better than the #1 golfer in the world, but he has, right? But he has a coach, and it's important. Mike Tyson had a coach, even though he could knock his head right off the top of his opponent, but he has a coach. A coach is more about someone that can help you find your strengths and weaknesses, like literally identifying them, and helping you work on strategies to improve, right? And to keep you focused and keep you on task and all that kind of stuff, right? Oh, okay. Well, go to FX Bootcamp. There's information there. So, anyways, I'm just like, this is not the right time and place. What time is it? Yeah. Okay, good. All right. Man, I'm going to be on the beach later today. Woo-hoo-hoo-hoo-hoo! Goodbye, cold, horrible world. Hello, beach. All right. We did all C. We did that one already. We did pound dollar already. We did euro dollar. USD CAD. Yeah, let's do CAD and oil. Right? Man, this one's been frustrating. Yeah, we could do Kiwi dollar. That sounds good. Jim's like, only an inch of snow here, huh? All right, come on, guys, tone it down. I apologize. I probably went too hard. Sorry, just too much coffee or something. But I was too hard on Jimbo. I apologize to Jimbo. Well, all right, Jeanette, we're now going to start charging money for that. So here's the thing. Whole bunch of people signed up for the one-on-one. They booked times, they did everything, and then they didn't show up. Like the vast majority, like mass majority of people fail at trading because they can't do the work. So they signed up for times and all that kind of stuff, and great. And Ryan was ready, sitting there, totally prepared, ready to go. People don't show up. Losers. So so people are gonna get an announcement now. Sorry, thanks for signing up for free 101, whatever. It's $200 now. That's that. And if you don't show up for your $200 appointment, thank you for the college savings fund. So anyways, thank you, Jimbo, for understanding. And if I did take it too much, but, I got to, so everyone else should not overreact as well. Jimbo's part of the family, guys. Okay. Yep. All right. So anyways, Kitty Cat, I'm frustrated with because I've been waiting and waiting and waiting for this. You see how this has helped me? Like, we've gone back now. Has it been a month and a half? I was looking to a buy, looking for a buy. Then right here I declare, that's it. I'm not looking for a buy. And then I've even started putting up the bearish trade plans. No, I don't want it to be bearish. They're there. And I'm still here going, you know what? I have to totally ignore any setup that I see. It's going to have to make the higher high to prove to me that it's reversed, right? So then even yesterday, I think it was, I put the arrow here and everything. Maybe it was Monday. I think it was Tuesday. And down she goes again. Like, these are very easy technical trades if you happen to be bearish. If you don't happen to be bearish, then you should do what I did, just walk away. But check this out, like, great sell zone. Look at that, great sell. And then if you go all the way back, this has been, look, lower low, lower high, sell. 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 Like, beautiful over and over and over again. I just don't want it because that means some pretty bad things. But I think it's both a combination of supply side and demand side issues. You know what I mean? Issues. So I guess if I was more aggressive, I would be taking advantage of that. I'm looking at trading, sort of on the basis of years, not days or hours. Right? So I just have to sit and wait. And sometimes I feel like if I start chasing things just because things are technically there, what it does is it puts a crack in my armor of discipline. I'm not saying it's easy, but I have to be disciplined. So that when I see what I see, I do what I believe needs to be done. There's no question. There's no humming and hawing about it. I do it. Every time. If I sort of veer from the rules of engagement a little bit, like, every once in a while, I shoot an unarmed citizen, but most of the time I follow the rules of engagement, right? Well, what happens is I end up getting a little bit pregnant. And I don't want to be a little bit pregnant. So, right? So, discipline. It falls, I see it, I can set them up, I can draw the little arrows for you, but I have to walk away. Well, the demand side issue would be low growth in places like China. So an economic slowdown in China would be a demand side issue, okay? Supply side would be the overproduction of oil based on the Iranian embargo, which gave motivated Iran to pump as much oil as they possibly could into the market before the embargo. And then the Russians and the Saudis and the Venezuelans and the Libyans, right? They're all doing the same thing too. So those economies suck. So the only way they can keep the rich people alive is to keep pumping oil. So we got too much oil being supplied to a market that is also probably slowing down a little bit. And I believe it's because of the Europeans. And everybody gets mad at me now. I get a lot of, so I got to be careful with how I say this, but the European economy is still a laggard economy. Okay? The United States has been booming for 5, 6, 7 years now, and Europe still is not. So if Europe was doing better, their factories and their productivity, right, the economic engine of Europe would be humming a lot better. Instead, they're worried about, like, Italy collapsing. They're worried about 20% employment in practically every European economy, and high taxes and low growth, and they don't import any money. And then on top of that, it's Brexit. There's all these different things going on. So the economic activity of Europe is way behind what it probably should be if they had a slightly different economic strategy. But they've chosen just a different economic system. So I'm not here to say one is better than the other, because one is like what Europeans chose is definitely very European, right? So what you do is you have high taxes and high unemployment. Okay, it's not a criticism. It's just a choice. In the United States, they have low taxes and low unemployment. Doesn't make it better, it just makes it different, and ultimately maybe things end up being roughly the same. Okay, but what I'm getting to is because of the slower economic activity of the Eurozone, it impacts the rest of the global world, which would really benefit from their economic activity, which would include importing products and services from other countries. So then suddenly Europeans, which are 450 million people, so almost 50% bigger than the United States, or anyways, bigger than the United States, they could be importing a lot more from places like China. And then China's economic activity would be a lot higher, which means they would be then drawing down on energy, which then would push energy prices higher, right? And then because of that, we go. So it's all, I blame the French and the Italians. Mr. Highfield says we don't print as, yes, that's part of it, and less debt, sure. Right? These are just economic choices. They're not like one is not better than the other. You end up in many sort of economic, you end up with many similarities, right? Many similar outcomes through different systems. Okay? But if you live in a world where it's difficult to be an entrepreneur, and if you fail to be an entrepreneur, you're branded as being bad for the rest of your entire life. There's no real bankruptcy. You don't get to try again. So you're banned from the entrepreneurial club the rest of your life. If you actually hire an employee, it's impossible to fire this guy, even if they're a loser. So you can never get the best, and the employees are never motivated to be better, and all this kind of stuff. So in that case, if you're an entrepreneur, you're going to wait as long as you possibly can to hire an employee, because once you hire an employee, they're super expensive and they're super pain, and you get taxed up the yin yang and all that kind of stuff. So you'd rather have the extra cash and have slower productivity than have higher productivity, but then you hire some idiot that you can't fire. So, it's just a system that says you're going to value that, let's say that individual worker more, protect that worker more, and if they don't have a job, tax the rich and then give them a whole bunch of benefits to say, don't worry about it, you don't have to work, don't worry about it, right? And you just get an economic system that works, but you get slower productivity, higher taxes, higher unemployment, but as a whole, it works as a social mechanism. And it'll have its own strengths and weaknesses. And then the flip side, the American version, is a lot different from the Canadian and Australian and UK version and all that kind of stuff. So they're all different. But the American version is always favored, let's say in the last 30 or 40 years, lower taxes, higher productivity, lower unemployment. So you get like France and Italy and Spain, they're still at like 15% unemployment or 10% unemployment, right? Which is worse than the worst of the recession here. So now we're at 3% unemployment. Lower taxes. If you want a job, get a job. There's jobs everywhere. Everyone has a job. You can get a different job. Just leave. There's another job somewhere else, right? So it's just a different thing. But I'm not saying it's better. It just ends up slightly different. But there are a lot of things that are similar, right? But it's just an economic model. If the Europeans had an economic model that led them to higher productivity, which means you're going to need lower unemployment, right? And to entice all of that, you're going to need lower taxes and you're going to need lower red tape. Then they would have higher productivity, which would favor entrepreneurialism, and suddenly more people would be making money. Well, I shouldn't have said that, because if you run the models, you don't end up making sort of more money. It ends up being about the same money, but it spreads around differently, right? But ultimately, China would be better off if the Europeans were more productive. Does that make sense? Thank you, Alan. I appreciate that. Yeah, how do you stay current on macro, micro information? Look at every website related to major central banks in the world. RBA, Bank of Canada, many of the Federal Reserves. I mean, just the Federal Reserve System, their websites are just amazing, right? RBNZ, did I say Bank of Canada? Bank of England, ECB, all these websites have tons of information. Then you have the World Bank and the IMF. Oh my gosh, are they an amazing wealth of information? And then I even like OPEC's point of view and the EIA's point of view. No, IEA, I always mix it up. International Energy Agency or something, right? IEA, which is the counterpart to OPEC. Okay, and if you just go to like those 10 websites, just amazing wealth of information. Okay. It does now, Stephen, but historically it does not. Okay, but in a response to the Great Recession, they did start paying interest on required reserves. That is a fairly new thing, and I honestly don't know if they've retracted it. I don't think so, but I haven't focused on that type of like policy detail since we got out of the Great Recession. So then I just focus on other things like macroeconomics versus direct central policy of the Fed, especially when they're getting out of quantitative easing and raising interest rates. So I don't know if they do. They probably stopped, but I don't recall coming across that detail. So, I don't know. But historically, no. Okay. But remember, during the Great Recession, they were basically funding the banks, right? It's a brilliant idea, but they needed banks to park money at the Fed, right? But like quantitative easing is great. So they buy bonds. Do they buy bonds from the Treasury? Like that's who issues bonds, right? Government bonds. U.S. government treasuries. Where do they come from? The Treasury. Right? I don't care about durable goods, Ian. They're meaningless. Don't worry about it. So anyways, the Fed did not buy from the government, because if they bought from the government, it would just go straight to the government, would never enter the economy, and that's not what they wanted. So how about this? Imagine you're JP Morgan or Goldman Sachs or Citibank, something like that. And the Fed says, hey, we're going to buy $300 million worth of bonds this month. Absolutely going to do it. Like, oh? So Goldman Sachs, JP Morgan, Citibank, would you please go to the Treasury, buy a whole bunch of them from the Treasury, and then sell it to us for a higher price? How would you like that opportunity if someone came to your door and said, yeah, I'd like to buy something from you at a profit, something that you don't own, but I'll guarantee that I'll pay you more money. It actually sounds scary, actually, right? But anyways, so what happened was the commercial banks went to the Fed, bought the Treasury, bought a whole bunch of treasuries, even at a discount, which is even better. And then the Fed bought those treasuries from the central bank. No, sorry, did I screw that up? The Fed bought the treasuries from the commercial bank. Sorry. So the Fed announces to the commercial banks they're going to start buying hundreds of millions of dollars from bonds from them. So then the bank goes to the Treasury, buys the bonds. Then the Fed comes in and said, yeah, we'll buy them all, everything you have. So now the Fed gives the commercial banks hundreds of millions of dollars, and the banks give the Fed the treasuries. So yes, the whole entire U.S. commercial banking system was front-running the Fed, and the Fed asked them to do it. But now, see, look what happened. Now in the commercial bank, there is cash. Nice. Isn't that a neat trick? Ross says that's why it's a rigged game. Who said it was a rigged game? Yeah, rigged for you. Rigged for you, my friend. If you understand them, make money. Okay, so now the banks are capitalized. They didn't lend any of it out, if you recall. But the market returned, asset prices increased. And then the Fed says, we're done with quantitative easing. We're not going to buy bonds now. We're going to sell bonds. So who did they sell the bonds to? The commercial banks. So now the money goes back to the Fed, and they destroy it, and the commercial banks get the bonds back. Nothing happened. It's beautiful. Beautiful. Nothing happened. Save the world. So, you know what? Yeah, durable goods. Were we amazed about the durable goods? But you know, like Ross, don't say things like that. Just, it's not helpful to you. It's not helpful to anybody. It's like the conspiracy theory stuff and all the Fed. And some people say like really retarded stuff about the Fed. Let's just be foreign exchange traders, right? There are central banks that are designed to keep inflation at a reasonable growth level, right? And in other economies, it's designed to also make sure the economy is relatively healthy. Like in the Fed's dual mandate.